Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Kevin's driving the bus here today, so I don't even know if I've done this right. In fact, actually, look at that. I'm totally on the wrong page. So I have no idea if we're recording or not, but I'm going to keep my fingers crossed and hope Kevin's got us pointed in a good direction. Anyway. Good morning, everybody. Good afternoon, good evening, wherever you are in the world. Super exciting time to be alive and in the markets, or it's utter chaos. It's really a question of your perspective, I suppose. Hey, look at that. I got the channel up and running. Yay. And, you can hear even the fun musical interlude there. Now, how do we get over to where Kevin is? Let's just see what he's up to. And all right. Thank you so much, Kevin, for driving the bus here. I couldn't do this without you. It looks like we've got a few people on the site here. Actually, a pretty quiet room. About 20 people here this morning. I suppose with the market kind of wonky and Bitcoin broke its top there, you can really kind of feel the euphoria coming out of the market. It's interesting, for those people that do have access to this dashboard, mixed message. Brett was breaking down. Somebody actually asked me to report on this the other day. I haven't been looking at it every day. So much to look at on the site, but we broke down, and it looks like actually we're jumping back up here. So I give this kind of a wishy-washy within sort of a bullish structure here. It's not terrible. It's not great. It's not bad. If anything, it kind of makes sense that Bitcoin kind of dumped and everybody's like, oh, sky's falling, and then perk back. Once slow gets up into sort of overbought zones, and then we start breaking down, be careful. So that isn't now. If anything, what I'm kind of thinking right now is risk wants to go up. If I look at the S&P 500, for example, there's that same sort of image, but just a little waffly. Interesting how the S&Ps are actually breaking down here a little bit. Also, too, what I see, it almost feels like crypto and stock market are slightly out of sync right now. We might have to wait to get through May, June for these things to get sort of back in sync as sort of risk on proxies. Because what I've noticed here, you can see there's a discernible disconnect here between things like gold and the classic risk off bonds and yen, and risk on good old crypto and oil and stocks. I get the impression to a certain degree that there was almost like Bitcoin and gold are the store of value kind of stories, but this just got a little too far too fast, and there was almost like a big sort of, almost feels like there was a spread trade almost initiated here where they sold their Bitcoins and they bought gold. I don't know. We'll see what happens. Of course, 2020, especially the early part of 2020. Oh, goodness, this is going to be tough. I think I showed you. I don't even know if I have it. I should have it around here somewhere. Question is, where the heck do I keep this stuff? I don't think I had it in the logos, but I was reading a really cool technical analysis book somebody sent me, and there was that Brennan cycle. I don't know if you guys remember seeing that or not. I was kind of hoping I could just find it quickly on my dashboard here. Maybe it is over in 2021 images. Where are you? Are you in here somewhere? Come on, baby. You're in here somewhere. I know you are. Don't hold out on me. Oh, darn. Can't find it. Anyway, if somebody happens to know what I'm talking about, that 250-year chart, and happens to have it in the lounge, or happens to have it handy, if you could just throw it in the lounge, that would be awesome. I suppose while I'm waiting, we can. Somebody just brought a donkey in, and here come the strippers. Oh my God, this could get really ugly. I can just go through old sound bites while I wait for somebody to post that chart. No, Didn't work. Oh well. I was hoping maybe I could get you guys to help me out here and motivate you to. Where the hell did that damn chart go? It's weird. Like you save stuff, right? And then it just sort of disappears. Anyway, it's on this computer somewhere. Anyway, I had a really cool chart. You might even be able to find it on the internet. But what's the guy's name? I think it's like, I always forget. It's like Bannon or something like that, or Brannon. Anyway, anybody know what the hell I'm talking about here? Am I just talking to myself? Oh, I'll get the damn book. Hold on a second. Crazy market oriented. Start your day. This is going to drive me nuts if I don't get the guy's name right. Yeah, what the hell is his name? His name is, oh God, look for the bibliography and the index, and there it is. What the hell is his name? No, I don't even have my glasses, so I can't even see it. How frustrating. Hang in there, everybody. I'll get there. Benner, Benner. Thank you. Appreciate the assistance. Benner. Boom. Images. Oh, I'm using DuckDuckGo, so who knows what the hell this is going to be. Stock market. All right. There it is. That's what I wanted to show you guys. So I'll try to save this again. See what the hell I come up with here. Benner, Benner chart. Hopefully this saves. Okay, so we'll go boom. And wow, that sure is a big image. This is the image I was talking about. Whoops, can't do that there. Do this here. There we go. All right, so hopefully you guys can see what the hell I'm talking about here. Yeah, it's tough to find this darn thing, eh? Yeah, this is actually a cool one because this is a really, really big image. So, but anyway, this was written forever ago, like 200 years ago. I always like to refer back to this because it just goes to show how typical this silly capitalist game is. That actually it's incredibly cliche. The only problem is people come to the market, they look at the market in a very short-term sort of picture, and they take sort of conclusions that they see on a very short-term basis as the way the market always is. And it's not like that at all, people. You have to learn this. Write it down if you don't understand this. Just listen to me. Believe me. The market constantly is changing. Market state. That's what we call it. Whether it be, periods when you're going to be going through friendly economic cycles, or whether it's going to be just simple seasonal windows. Buy when it snows, sell when it goes. But the point here is that the market is always changing, and there are times to look to make a killing in the market, and there are times to just play your cards close to the vest. And I hate to say it sucks horsecocks, but I might as well talk truth to you rather than bullshit you. But here we are. 1999, 2019 was a market peak. I mean, that peak of 2019, early 2020 with the cool Kelly Loeffler and all the fucking crony capitalism, all those insiders selling the top of the market there. And, Mr. You-know-who telling you, no, everything's fine. The economy's perfect, blah, 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 blah. And then kaboom! Well, hell breaks loose. The only problem with this image is this is actually assuming that whatever you're measuring things in stays constant. And this is where the hardest part of this whole goddamn market is the fact that the people in charge have gone and significantly messed with the money supply. So as a result, it's actually damn difficult to figure out what the hell something's worth. And that's this image. And, I really tried to drive this home in the level 1 program. So all you new level 1ers, you have to understand this, that this thing here, and we kind of joked, if you look at the long-term logarithmic chart of the Dow, and if I go something like, INDU. I think actually, or maybe it's DJY. I think one of these is gives you like a really, really long dated chart, and that's what we need to see. Hey, there we go. You know, you look at this chart, and this is in the actually here, maybe I'm going to go 2 weeks. This is in the education program, and you know, I did things like this channel, boom, boom, and we can just go off that low. It's fine. Boom. There's basically, and this is very rough. Keep in mind, certainly not rocket science, but same time too, it's not specifically exact, but there is basically our trend line growth based on if we stay in this sort of Bretton Woods established world following the Great Depression. So, you know, you look at how I got into the business when I first started, right, was right in here. And I've told you guys, you know, love runners, you have to understand this. This is exactly, you're going to be doing things like OBV, on balance volume. And we're going to tell you the story of Joe Granville, where I might argue that just like Joe Granville, here we are actually, we went through a major cycle pivot, right? Right in, I think, somewhere in this area, 2017, 2018. And the problem here is Joe, of course, got super bearish, and oh boy, well, that wasn't a very good idea. I'm worried. You know, people that get super, super bearish about the stock market, I don't think that that's a good idea. In fact, I think we're probably heading up to the top of this channel up here. And you look at these numbers and you go, 100,000 on the Dow? What are you, crazy, Brian? How the fuck is that supposed to happen? And of course, because this is time, right, we're actually expecting this peak to come in around 2030. What should it be? Actually, let's do a quiz. Let's see if anybody actually listens to half of the shit that Brian says. Who can tell me when the next greed cycle peak should be, according to Brian's crazy ass analysis? You should be able to give me the year within 1 or 2 years. Let's see. Does anybody help me here? Wrong. All right. So Cole gave a shot. He was close, but at least he tried. So that's good. Anybody else? No, now you're getting even colder. You're going the wrong direction. And that was from my level 3 instructor. Oh, that's a bit scary. 2032, Miguel. Hey, there you go. But from today, Colleen? 17 years from today? Or 17 years from when? So, right. So 17 and a half years from 2018 is roughly anyone? 2035. Oh goodness. Maybe it is time that I leave TRI. I don't think you guys are listening to me anymore. Anyway, so where is 2035? That is right in here. That's actually where I would expect the peak to come in. And that should be somewhere around, what's that number up there? What does that say? 161,000 on the Dow. Ay. 161,000? How does that happen? And now we know how it happens. Is in essence, they're just going to keep the printing presses just chugging along. And the irony of it all is that this is going to play out exactly the way it's supposed to play out. We know exactly what the future is. It's going to look like this. And this is the adjusted, what if we could keep the money supply stable and just constant, this is what our future is going to look like. Which is okay. I mean, you can see that's a percentage move. We're at about 2 or so, and we're going to jump up to 5, which is, you know, what, about 2.5%, you know, or what, 2.5 times. That's pretty realistic. But in the stupid Fakezi nonsense, we're going to be going here from like 30,000 up to like 160, 170,000, which is what? What is that? That's like a six-fold increase. Can you guys see the difference? So it's almost like they're going to double the money supply between now and 2035. That makes sense, guys? What is it? Who can tell me what the money supply is right now? Should be able to tell me a pretty good idea. So based on this analysis, we could actually figure out what that money supply, if we figure that the Dow is going to be 160, 170,000 here at the top, we should be able to figure out exactly what the rate of growth of the money supply has to be to get to that number. That's kind of a fun conversation. But anyway, as long as I have the opportunity to speak to you guys, you're going to constantly be hearing this from me. I thought it was fascinating. I was listening to another old timer, TTFN or something like that. He's on YouTube. Pretty smart guy. I'd listen to him. And it's kind of funny. All the callers are calling in going, I'm expecting deflation. I'm positioned for deflation. And the guy's going, deflation? What are you, crazy? Don't you see what's going on in the world? There ain't no deflation going on anywhere in the world right now. That past 20 years, that was supposed to be our deflationary cycle. And the 1%, the banksters, they fucked us. And they made damn sure this damn nonsense that you look out your window did not deflate. So, add another zero onto the end of your prices. Shitload more currency printed. There was no fucking way in hell these guys were going to let this thing deflate. So at absolute worst, it goes sideways through this, right? And that's this image, right? Absolute worst, we go sideways. Absolute worst, we go sideways. And of course, through this is exactly when everybody's like, oh, sky's falling. And they don't understand that that's an old story. The sky was in January 1st, 2000. That is when you should have been going, the sky is about to fall. That's when you should have been going that. Not now. The sky has already fallen, and we live in this shit-ass fucking bucket of a world we live in with Winnie the Pooh driving the bus now. That is the definition of the sky is falling. I'll tell you, back in these days, oh my God, life was so fucking easy back here. Having sex with JoJo, just, oh God, in the bullpen. I remember in this kind of market, guys in the bullpen, shilling.com stocks, they would literally go on a daily basis out to their hookers and visit their second office. No. No, the point is JoJo and I, we were young. We were in our 20s, early 30s, right? Life was just so easy. It was just so fun. Hell, Liam was born through here. Huh? What do you think, huh? Point is, this world that we live in now, it's a shadow of the world that we lived in back here. The good part about it is all this shit goes in cycles, right? It all goes in circles. And my hunch is, if you have the tenacity, if you have the kahunas to stick around for the next 10, 15 years, and it's going to be a while. It's not going to be tomorrow. But probably by the end of the sort of 30s, we're going to be back into that sort of absolute insanity. The next couple years, I think, are still muddling around. And in a weird sort of way, if you think about the worst part of the Second World War, it was right in this 1942 area. This was the absolute worst of the shit, right? In fact, actually, I was talking about this on the public broadcast, I think, recently. 1941, Pearl Harbor, right? 1942, Stalingrad, and Operation Barbarossa. I mean, the absolute worst of humanity was right here. So, fuck me. I mean, here we are, 2021, June. I would actually say my hunch is between now and this time next year, 1 year from now, we actually see the worst of whatever the hell this shit is. And I got a funny feeling. It's weird. I was even talking in the day trader room this morning. People in the United States are acting as if COVID's over. It's all done. It's finished. What? It doesn't work that way. I wouldn't even be surprised if people who got COVID before are going to get COVID a second time. They might even get it a third time. Oh, God. Super, super dangerous. And what also really kind of bothers me is you're getting U.S. politicians now going around the world saying, hey, we're going to donate all these COVID vaccines. Donate? Excuse me, Mr. Biden, your country's bankrupt. You are spending more than $1 trillion a year of borrowed money from around the world that you don't have, going deeper and deeper and deeper. Will, you're a U.S. citizen. You should be saying, excuse me, sir, enough with this generosity of donating COVID. How about we get our fucking financial house in order? I mean, this is insane. I can't believe the guy's going around. We'll donate 500 million doses of COVID. Why? What the hell? What's going on here? I mean, get your own fucking house in order and quit the goddamn hegemony system's about to collapse here, sir. Get your own house in order. And all he's talking about, he's still living in the world like 20, 30 years ago where the United States could just write blank checks right, left, and center and nobody gave a shit. I mean, it's weird. Honestly, the guy's getting really, really old. I think he's actually a little bit out of touch with reality. He doesn't realize how bad is. And anyway, ironically enough, in a weird sort of way, to me, that actually validates what I'm seeing in the marketplace is I think the bankers have taken over. I mean, you look at my country. My country, it's a joke, right? We got a school teacher and we got captain of the cheerleaders running our fucking government. What? I mean, what the fuck? So, I mean, it's nuts what's going on here in this crazy world. And like I said, I think this goes on for another year. So the irony of it all is if you can catch the swings of this insanity, you should be able to make a shitload of money. As you can see, there's a bit of green on the screen today. And the little poppers are popping. Look at this little guy go. Woohoo! What do you think? Is there any money to be made on that shit? I think I missed the double the first go round, but great to see him breaking up to new highs again. I mean, this it's just happening all over the place. And really, I hate to say it, but I think it's exactly what the capitalists want. We're going to get that price inflation. You saw the Dow. Dow's got to get up to 100 and whatever thousand over the next 10, 15 years. They are repricing this market higher. So take advantage of it if you can. One thing I absolutely love about the way I approach the market is, of course, I'm coming in as a cheap ass at the bottom end of the range. This is one that I picked up yesterday. It's interesting. Somebody wanted to knock it back down. Look at that. It's 14.5 to 15.5, last at 13.5. So why? I guess somebody had to get out there earlier today. But gee whiz, look at that chart. I went and bought some yesterday at 14.5. I mean, there's so much money to be made in this market. It's ridiculous. Whether you play the stock market or whether you play cryptocurrency market, I think you have to understand the context of the market state. I do believe that we're just about out of a correction window, but we're not there yet, right? Usually the end of the correction window is the end of June. And if anything, seeing what I'm seeing with the whole political rhetoric down in the States, good old Joe is, he's got a really, I get the impression as long as the stock market's relatively strong, he has a really hard pitch to justify a massive new government stimulus package, although it's awfully hard to see what's going on here. And huge new deficits and stuff like that. So believe it or not, and keep in mind that vote is supposed to be the end of June here. They wanted to get it done by that July 4th weekend. I actually think that they could engineer a fairly precipitous sell-off here to get the public nice and freaked out and get them to endorse Joe's program. I actually think that that's a very, very realistic possibility right here, guys. Remember, we're not out of that correction window yet. And sort of a testament to that, I actually went and bought some put options on a Canadian bank just because I looked at the chart, and of course, outside downside key reversals, that just speaks to me. And you tell me, I mean, does this chart look kind of heavy to you? It looks pretty damn heavy to me. And the irony of it all, I've told you guys this before, the irony of it all, it's not going to be the Americans that feel the pain in this coming recession. It's going to be all these international people and this idiocy when I look outside my window. And keep in mind, these are the people that are financing the idiocy when I look outside my window. And the worst part about the Chinese is these goddamn Canadian bankers, they actually believe these people. They trust them. What are you, stupid? If this fucking market falls apart, you're going to find that Chinese nonsense, fluff, garbage, pump up market, all of a sudden, all those orders that you thought were there are just going to vanish. And I'm fearful that a lot of the sales that they've done to justify this idiocy real estate market here locally were actually fraud. But only time will tell. And as it stands, I'm putting my money where my mouth is. I went and bought puts on this thing. So, do they juxtapose things like, oh, China's going to walk away from North American real estate transactions if the Americans don't support the bond market, or some bullshit like that, which causes these bank stocks to go down? And then, of course, everybody's freaking out. Oh, my God, you better pass the stimulus, Joe. Shouldn't we debate this? Fuck you stupid fuck. Get that guy! Kill him! I mean, you know how this stupid fucking insanity goes. Oh, Brian. Hey, there you go. Brian's on today. Woohoo! So, you know, have fun. What's so cool is Joe Z. I mean, just do it. You know, you don't have to. The funny thing is we could still make a fortune in this kind of market here. Just don't get sucked in. Don't believe any of these people. For God's sakes, don't believe anyone. And just, you know, let the charts tell you when to act. You know, you see W's. Okay, fine. I'll go in and buy against a W. I like W's. See a W? All right. I'll go in and buy a W. I mean, I'm doing pretty good on these. Can't complain. Site members' ideas. I'll buy that W. And you can even see they could even knock these names down here. And actually, I've got a little bit of cushion. I think I'm long from this area. Niblitz told me that actually he got a double off on that rally. Way to go, Niblitz. You awesome dude. Look at this PULM. I mean, am I interested in coming in and buying a name that looks like that? Damn straight. I don't know what's going to happen in the future. Can't tell you. Does Joe get his socialism program passed and all these stocks go fucking apeshit to the upside because of inflation fears? Could be. Does the legislation get knocked down and these stocks rally because the U.S. dollar's rallying? People are fearful of global recession and they go piling into U.S. companies because on a relative basis, they seem a lot more attractive. Could be. I don't know. But I'll tell you, I love me my W's at bottom ends of ranges. And that's just the kind of guy that I am. Don't have an opinion. Just trade your setups. Let's see. So actually, you know, it's interesting that I did sort of mention these things. Like, I think this is a SPAC. I'm not positive. I know, excuse me. I know SPACs have become extremely popular in the market of late, and we bought a bunch of them. I think this is another great looking one that we bought. Nice breakout down here. Key reversals. Oh my goodness. Look, it spired out another fucking key reversal here today. So these SPACs, and remember, I'm here to make money. So I mean, hell, if I see W's, if I see key reversals, I'm in there buying. You know me. I'm here to make money from trading. But frankly speaking, I don't quite understand how the logic of this works. So I did actually put a request out about a week or two ago, well, maybe even a month ago. Kind of, does anybody know what the fuck this stuff is and how it works? And I was, you know, just exceedingly pleased, tickled pink. One site member came back and was like, yeah, Brian, you know, actually, I've done a bit of research. I put a presentation together and I'd love, if I could, to give that presentation to TRI. I was like, okay, twist my rubber arm. So, with that said, Kevin actually has everything all queued up. So I think I'm gonna, hopefully you enjoyed Brian's crazy little rant. I don't know whether it was any value to you or not. There's not a lot of new stuff that I'm buying, but if I am buying or selling anything, of course, you can find it in Brian's Big Bot Room. I'll do this sort of public broadcast that I do after these shows, and speak to the public a little bit about broader market, where I see the corn and shit going here over the short term. So you can always refer to that after this is done. But we've got kind of a special treat, and hopefully what we'll do is we'll add this to the library. But like I said, Kevin set up, I guess you have a screen set up, and we'll just jump right over to you.
Yeah, I'll just, let me just share.
All right, cool.
Are you ready to go?
This works awesome. So yeah, why don't we jump right in? Is there a link to that PDF? I think it was a Google Doc, right?
Maybe yeah, I'll grab that in a minute and throw it in the lounge.
So then that way you can scroll through the presentation. You've got the PDF in front of you, so you can scroll through the slides as Peter's talking away. But I'm super stoked about today. And if anything, I'm going to put myself on mute. And Kevin, you take over and tell, you're driving the bus here.
Okay, well, I'm just going to hit play. Let me know if there's any audio issues, you guys on YouTube.
Hi, everybody.
Hold on, sorry, I need to restart that.
Hi, everybody. I'm Peter, and I'm going to do a briefing today on SPACs, Special Purpose Acquisitions Companies, and what you need to know about them. So, first of all, the disclaimer. This is just a copy-paste from all the disclaimers you've seen with TRI, and I just made a copy of it. So, to be clear, this is just educational entertainment, no financial advice, no investment advice. Also, in the top right corner here, you can see my avatar, so you know who I am on the chat room. Unfortunately, the video didn't work to capture it with my screencast, so you won't be able to see me. So let's start. SPACs. We're going to talk about what it is, the different parts of a SPACs, which involve sponsors, investors, pipe investors, and a target. We're going to have a look at the timeline. How long is a SPAC viable? We have a look at the famous sponsors, the considerations you need to keep in mind if you want to invest in a SPAC, and I will give you two of my investments where I invested a little bit of money in two different SPACs. So what is a SPAC? A SPAC is a blind pool of cash raised by financial sponsors through IPO to acquire a private operating company. So it's a lot of difficult language. It's just a big bag of money somebody put on the market, which means it's a ticker in TradingView, it's a ticker on the exchanges, but it's not a company. It's just a big bag of money that people or a group of people raised to potentially find a company to take over and put it on the market. Most of the time, a SPAC is viable for 24 months after the first IPO is listed. Once everything is done, they will look for a target company. Most of the time, they already have one or two or several companies in mind, and they just start talking to them to see if they can find an agreement to put their company on the market. So we have the target company. It's a fully operating private company. And once they finish the deal, they will take over the ticker or change the ticker, but they don't have to do an IPO anymore, and it goes to market very soon. So the different parts of a SPAC. The SPAC founders are called the sponsors. This is one or a group of people who have a very good idea about the market, and they are looking for investors. The pipe investors are coming later to the game. I will talk about them a little bit more later on. And then the target. So the sponsors, who are they? They know a part of the market very well. They will look for a suitable company and try to seal the deal so they can bring that company to the market. Also keep in mind, they don't have to buy the whole market. They can also, the whole company. They can also buy just a portion of the company, which is interesting to them. You may ask, why don't they just buy the whole company? Most of the time, maybe it's too expensive. They don't have enough money, or they didn't raise enough money to buy the total company. So they just will they will just buy that part of the company that's interesting to them. Yes. The sponsors will be well compensated for their time invested. They have the network and the connections to get through to these companies, and they have the insight into the market. Most of the time, these people already have a pretty clear idea about what they want to do before they already do the IPO, before they talk to the first investors and find their money. They probably have already everything planned out in their head. So the investors, also known as us, needs to have high confidence in the sponsor because they really don't know what the sponsor will do. They will give their money to the sponsor and that's it. They don't know anything more. You can get some extra information if you just research the person who the spec created. So for instance, it's somebody in a tech environment, you probably won't go find a company who is doing something in the medical sector unless it's very high tech. So you already know in which direction they can steer their spec in, but that's it. You can also see, did they already do some specs or not? Were they successful or not? Most of the time, the shares will cost $10 or €10, depending in which part of the country you are. This is not always the case. There are some other cases where it's $20 or €20. It's depending on the spec. The first investments often get free warrants to sweeten the deal. It's not easy just to give somebody blindly your money and trust them for 100%. So the first investors most of the time get free warrants to them. It depends. Sometimes it's for one share they get for 6 shares they get 1 warrant, or for 10 shares they get 1 warrant, depending on the conditions in the spec. The strike price of the warrant is $11.50. It's not always the case. It's not always freely exercisable. We'll talk about that later on. And most of the time, the first investors need to invest a vast amount of money. So below $100,000, nothing is possible to be a first investor. So it's not that you can do a little old lady or nibble to become a first investor and get those free warrants. No, you have to pay up a serious amount of money to be part of it. And also, now it gets interesting. The investors, they have to blindly follow the spec founder, also called the sponsor, but they do get a vote. And these voting rights is for everybody who holds a share of the spec, which means, let's say a sponsor found a company, they made a deal, he has to present it then to the investors, and they have to vote if they will take the deal or not. So everything can be good and fine, but if the sponsor doesn't get 70% of the votes to continue with the deal is off. Also, the sponsor will buy back the shares from the investors who didn't agree, if they want to that. If this is smart to do as an investor, I will tell you that later on. So you have a money back guarantee. First of all, you can vote negative, and there's an option that the sponsor probably will buy back the shares from you. Or let's say the sponsor doesn't find a company or can't make a deal with a company within 24 months, then the investors also get their money back. It's not a full $10 or €10 per share. It's a little bit less due to some interest and everything. I think you will maybe get back $9.9 or something like that. So you lose a little bit of money, but it's not that everything is gone. Always read the terms and conditions of the spec. Everything is specified in that document. I know it's long, it's boring, but you have to work for your money. If you want to invest it, at least read the terms and conditions. Otherwise, you just throw away your money and you don't know what to expect. So here's an example of the terms and conditions. So 24 months to complete a business combination. This is after the sponsor did the IPO for the spec, so not before that. 70% or more shareholders' approval required for a proposed business combination, subject to the quorum requirements that are set out in the prospectus. And here, in the case of a successful business combination, the company will buy back ordinary shares from dissenting shareholders for an amount of the initial investment less negative interest payable on the escrow account, on the terms and conditions that are set out in the prospectus. So like I told you, you can get your money back, but due to the negative interest from the escrow account, you lose a little bit, but it's not much. If no business combination is completed by the business combination deadline, the company will be dissolved and liquidated, and the remaining assets will be reimbursed to the shareholders. Potential investors should read the prospectus, like I told you, before making an investment decision in order to fully understand the potential risks and rewards associated with the decision to invest in the unit. Like I told you, always read this document. This is just a copy-paste from an older one, but it can be 50, 60 pages long, depending on what's everything described in it. So, PIPE investors. Now it gets really interesting. PIPE investors is a private investment in public equity, what we call institutional investors. It's a hedge fund, mutual pension funds, whatever. These guys have a lot of money and they want to invest it. So here, the big difference between a PIPE investor and the first investors is the PIPE investors knows which company is going to be taken over. And then they can already get the same conditions to invest in it as the investors. You maybe think, why? This is not fair. Well, they have the big bucks. It's easy as that. I mean, if a SPAC raises $200-300 million, the PIPE investors will easily give also $200-400 million. So they basically double the investment. To do that, they want to have some guarantees to know which companies are possible for takeover. So they need a little bit more information to invest in the company, and that's also the reason why they get the same condition as the early investors, and they also get the free warrants. Famous PIPE investors could increase SPAC confidence. The share price before SPAC is finished is also possible that it can increase. Let's for say if you have a SPAC, everything is done, and a PIPE investors like Warren Buffett invests some millions in it. Probably the price of the IPO shares will go up because a lot of people think, "Ooh, he's a smart guy, and he won't be investing in something that doesn't have potential." So you see, the PIPE investors can do a lot of things for the SPAC, especially confidence, and also they can give a bump in the shares prices if it's known to the public. Then the target. You might think, why does a company want to do a SPAC? Why not an IPO? Well, that's very easy. Most of the targets, they want to go to get listed on the market, but they want to avoid all the things they have to do to make it on the market. Second thing is they are looking for growing capital, which they want to do to get listed on the market. Through a SPAC, the company can skip the IPO procedure, which saves them a lot of time and money. I don't know all the bells and whistles that they have to do to get onto the market through an IPO, but I know it's a lot of time, at least half a year of work. They have to prepare their books. They have to show their books for the last several years. What did they do? Where did their money come from? What did they money invested in? Are they profitable or not? And stuff like that. Most of the people in such companies don't have the time or don't have the knowledge to do so. Second of all, there's always the insecurity that an IPO can fail. And a third one, don't think it's listed in the PowerPoint, is that they cannot choose when the IPO starts. So for instance, if it's like in May, or if you go back 1 year due to Corona, the big dump on the market, can you imagine if then your IPO comes to market? Probably nobody will buy your shares, and your shares will reduce prices by 10-20% because of just bad market conditions. With a SPAC, you can at least have a, how do I say it? You can see when you finish the deal and when the SPAC takes over the new ticker and the company goes to market. So you have a little bit more flexibility on when the company is finally listed on the exchange. So famous SPACs is Virgin Galactic, DraftKings, Nikola, and Lucid. Lucid is still a SPAC. It's not fully completed, but it will be one of the more famous one. So if you have a look at Virgin Galactic, this is the chart. So if you can see, It started somewhere in October 17, and you see the price hovers around $10. And that stays basically the same for the next 2 years. So that's the 24 months that a SPAC is created. Not a lot of happened. Probably not much news came out, and then the news came out, the company is listed. I don't know why this dumped to below $8, but heck, that was a moment to buy shares of it. And then you see the SPAC, it goes up, it goes down. It's just a normal market share. If you see DraftKings, you see it came to market in August 19, and look already, it stayed for a good few months around $10, and then already due to some probably some news, it changes. Here you see we don't know if it already was finished. I didn't do the research on that. We will see it. We will look at other graphs later on, and we'll have a look that just some news which is not confirmed can have a big price, big difference in price on the SPACs. And the last one, Nikolai, the same. I think here is the 24 months they took to complete the deal, because they started before July in 2018 and they finished in March 2020. So they took almost 2 years to finalize the deal, and it's the same. The most SPACs, they go up high. It's not always that case. A lot of money has been flown into SPACs lately. We will discuss that later on. And then, we will discuss it now. The SPACs growth over the last decade. Let's have a look. So you see it started in 2009. This is proceeds in millions of US dollars. So this is 20 billion, $20,000 million. So you only see in 2009, we started with $36 million. And by 2021, we are already, this is just estimated. Have a look at 2020, this is for sure. From 36 million, we gained to $83 billion. So that's a big increase in money. And that's probably why all the SPACs before 2020, if you can remember this, the graphics, the charts from DraftKings and from Virgin Galactic, they didn't change much in the first 2 years until the SPAC was finished. And then you had like big price fluctuations. And that's, I think, because of all the money that wasn't there in those early years. From 2019 to 2020, look at the big difference. It's a sixfold, almost a sevenfold in money that's flown into the SPACs. So I think that's the reason why on news the price fluctuates that hard on the SPACs. So a SPACs timeline. This is a lot of information. So formation and the IPO phase, this is when the sponsors are looking for the first investors. The PIPE investors are not yet considered here. They look around, reach out to banks to see if they have clients that want to invest money in a SPAC, and they bring it to the market through the IPO phase. So that takes about at least 8 weeks up to, I don't know, there's no limit on it. But most of the time, the SPAC life cycle is 24 months. And this is from the time the SPAC goes to market. So, and then it's easy. The SPAC will search for the target. They will negotiate it, the deal. And here it gets interesting. The investors' meetings and shareholders vote. Do they agree, yes or no? And here is also the time that PIPE investors will come in and play. Do they agree with the proposed target or not? And then if it's not, the SPAC goes back to target researchers, negotiations, and then back to the meetings with the shareholders, investors, and PIPE investors to see if they accept it. If they accept it, it's approved, and the closing of the SPAC merger will start, which takes up 5 months maximum. And this is called de-SPACing. What it is, I will tell you later on. Also, if nothing happens, SPAC ceases target search, wind up SPAC, and return investments to shareholders. This is if the sponsor cannot find a target or cannot negotiate a deal with it, the SPAC just unwinds. Investors get their $10 back minus a negative interest from the escrow accounts, and they will part ways, and everybody's happy. They invested some money, didn't lose much, just cost them time. So the de-SPACing, what it is, so it's up to 19 months before to seal the deal, and up to the last 5 months, if everything is approved, the de-SPACing will take place. And this is only, keep in mind, the 70% of all the shareholders and investors, SPAC investors, need to vote yes on the deal. If it's 69.9 yes votes, then the deal will not go through and the sponsor will have to look for a new target. So the final phase, which is also called de-SPACing, like I said, is up to 5 months' time. Excuse me. The SPAC and the target undertake a merger, acquisition, or other transaction that results in the operating business becoming a publicly traded company that effectively takes over the company status of the SPAC. And as a result of this process, the SPAC is de-SPAC and continues its life as a public company. So a lot of difficult words again, but it's easy. Just the company target just takes over the SPAC, which already had an IPO, which is already in our market, takes it over, it gets a new ticker symbol, and that's it. Now, have a look at famous sponsors. The first one is Chamath Palihapitiya. He founded 6 SPACs, which is called Social Capital Ethosopia Holding Corps 1 through 6. 3 are already filled. He did Virgin Galactic, Open Door, and Clover Health. And then we have Bill Ackman, founded Pershing Square Capital Management. And this SPAC is known to me to raise the most amount of money, which is $4 billion. I mean, $4 billion in money just handed over to one guy to find a company. They are still searching for it. I know they have come out with some news because this is also one of my picks. So I will continue talking about that later on. So the consideration before investing in a SPAC is who are the sponsor or who is the sponsor, depending. Sometimes it's one person, sometimes it's a group of persons. What is their track record? Did they already create a SPAC? Was it successful? Was it not? Are they legit? And then, I mean, do they have own skin in the game? I mean, why would you buy shares from a SPAC if the founder, if the sponsor doesn't have his own money invested in it? So I found that a little bit hard to invest in something where the creator of the SPAC, so the sponsor, doesn't have his own money, or at least amount of money invested in his own ideas. For me, that's a must. Whatever you guys decide to do with it, it's up to you. And this is a big one. Watch out for FUD and FOMO. We will see later on in some graphics what news can do to the price of the SPACs and also the warrants. It's unbelievable. And keep in mind, if you invest in such thing, then you have to, it's almost like crypto. It's like it goes up, it goes down. In several months, it triples and then it falls back for 50%. So know that this can happen before even the target company is officially announced, because it's all rumors, and those rumors can have a big influence on the price. Do research on the SPAC before buying it. I mean, you can't do a lot, but the things you can do is still, who are the sponsors? What did they do? Did they already do SPACs? Were they successful? Maybe they did a SPAC and they just finished the deal at the last possible month, and they got a bad deal because they didn't want to admit to dissolve the company, and they didn't want to admit that the deal failed. So they maybe take on a bad deal just to save their face. That's all possible, and you have to keep in mind that this is possible and probably will happen sometimes. So do your research, always read the terms and conditions of the SPAC, and protect yourself. So my favorite SPACs, also sweeteners, not financial advice of course, is PSTH, is the Pershing Square Tontine Holdings, and is the TBGY, the Pace Beneficial Finance Corps. So The Pershing Square Tontine Holdings is the ticker PSTH. It has 2 million shares out. This one is one of the Bill Ackman. So $20 per share. That's $4 billion. Bill Ackman created, and he still instills a lot of confidence with the public. That's probably why he got so much money. The spec was created, IPO was July 22, 2020. So it's almost 1 year old. They're looking for a mature company. Rumors are Stripe, Bloomberg, Starlink, Airbnb. We will look at the graph later on. So you see the rumors, depending on which time. I didn't look up when the rumors came out, but these are some big companies, and you will see later on in the prices are reflecting such rumors sometimes. Of course, they also have warrants. The earliest redeemable on July 22, 21, and 3 days after the completion of the merger. So if we pass now July 22, it's not redeemable. It also the deal also have to be finished, and 2 days after the finished deal, you can redeem your warrants. The exercise price is $23, so it's not the $11.50 we first mentioned, because this is a little bit different. Expiry of the warrants. This is also, so you can now buy already the warrants, but if the merger fails, the warrants are worthless. So you lose all your money. So watch out if you want to buy the warrants. Sometimes they're more interesting to buy the warrants because they're sometimes a little bit cheaper. But if the merger fails, you won't get anything. You won't get your $20 back like the investors. They get their $20 back minus the negative interest from the escrow accounts. Excuse me. Expiry also 5 years after the completed merger. Then automatically the warrants expire. And now it gets interesting. If the share price trade at above $36 or more for 20 out of 30 trading days. And if the share price equals or exceeds $20 for 20 out of 30 trading days. Management, of course, needs to give 30 days notice. This is also for the 5 years after the completed merger. I think they also have to give you 30 day notice. Not sure about that one because it's literally specified after 5 years after the completed merger that the warrants will expire. So now have a look at the graph. So you see here, it was brought to market, I think exactly at $20, and it barely went back to $20. Keep in mind, this is not a finished deal yet. This is still a spec with only rumors. And something interesting happened this week when I was preparing this presentation. So if you look, it went from $20 up to $34 and back down, almost back to $20. And I'm sorry, I don't know why we started here at above $20. Probably because there was so much demand on it, or I didn't find all the information on the chart, or TradingView didn't provide it. Maybe I don't know, but it should have started at $20 when it was listed. Where was it? Okay, yeah. This big gap here from $25, next day it dumped to almost $21.50. Why? Because news came out. News came out that Bill Ackman found a company and is going to take over 10% in Universal Music Group. I found it strange because other companies were already mentioned, like Starlink. What was the other one? Airbnb, and what was the other one? Let me think. Stripe or Bloomberg. So now with Universal Music Group, I think a lot of people found it a little bit odd, and the market just reacted and dumped. It dumped like 20-30%. And I just added a little bit more. I was long from approximately, where is my mouse? I was long from this area from between 23 and 24. I bought some, so I continued to buying a little bit more. That's a PSTH. Now we will look at the TPGY, Pace Beneficial Finance Corp. They have 35 million shares out. $10 per share, so 350 millions. They are for the moment negotiating with EVBox. This is a company out of Holland, so maybe Sjoerd knows them. And they create wall boxes to charge electrical cars. The spec was created last year on October 7th. Information on the warrants. Earliest redeemable 30 days after completion of our initial business combination and 12 months from the closing of this offering. Exercise price is $11.50. An expiry, of course, if the merger fails, 5 years after completed merger. Here again, if the share price trade at or above $18 or more for 20 out of 30 trading days, and if the share price equals or exceeds $10 for 20 out of the 30 trading days. Management needs to give 30 days notice, of course. Also, with the previous one, if you go just back, here, for the warrants, you see if the share price equals or exceeds $20 for 20 out of the 30 trading days. Keep this in mind. This I found strange. They already can redeem or say to their shareholders the warrants will expire within the next 30 days because we now give notice, because it never traded below $20. So keep this in mind. Within 30 days notice, management can say warrants will expire within the next 30 days. And this is the same for TPGY. It's the same. Look, $10. We started at $10 and then boop, big gap. Here, the news came out that they are talking to the EVBox company that produces the wall boxes, which people liked a lot. And look, they went from $11 up to almost 27, 28. That's already double your money in what, let's say, 1 month. Not even. But they slowly ground it down. They had some trouble with the EVBox company. What I found is that the books weren't completely in order, or they didn't want to share all the information, or they were still acquiring all the information. So the share price kept going down. Probably they need to fill in this gap. The gap is filled in. I'm long from the end of May, so I bought around $12 because I liked the chart. I liked the idea of investing in wall boxes. I think this is huge potential in the market because not a lot of homes have wall boxes. Even public wall boxes are still scarce around compared to normal tank stations. And in my opinion, they probably will take over, or there will be at least as much as wall box as there are now gas stations. So there's a huge growing potential. And that's one of the main reasons I invested in this. And also my second reason is this chart. The gap gets filled, and it's now slowly grinding up again. So this was my presentation on SPACs, special purpose acquisition companies. I hope you enjoyed it. I will thank you for your attention, and always do your own research. Thank you very much, and see you on the chat.
Cool.
Well, that was pretty damn cool, eh?
Yeah, that was awesome.
Yeah, well, that was a nice treat. What time is it? Well, it was about a good half hour, 40 minutes or so. I tell you, man, this TRI place, it just keeps bringing this value stuff. I have on the chart right now on the screen, on my screen here. I don't know whether Kevin's, what's Kevin showing?
Yeah, let me get you set up here on your screen.
Kevin's just finishing up with the presentation there. I think we put the SPACs PDF. Kevin put that in the lounge, and maybe we can give that to, I think it's Murat who does the write-ups.
Yeah, I'll send it to him.
Of the video, and maybe Murat, you can put like a hashtag something, because I think we really ought to put this in the library as well. So let's see, where's Murat? There's Murat. I'm just gonna give him this PDF link. Hopefully that works. I don't know. Anyway, that should be a link to today's PDF. Maybe Kevin, you could PM Murat that as well. That'd be
Yeah, okay. I'll send it to him right now.
So I have on the screen here right now TPG Pace Beneficial Finance Corp. I think this was the last one that Peter referenced, and I gotta say, man, I kind of like the look of this. Did you hear him correctly? He was saying that this was an EV charging equipment company that you plug into your house. Is that what he said? I think that's what he said.
Yeah. Like a wall box.
Yeah. I thought that was a fantastic idea. It's kind of cool. 88.6 is 12.5. Came down, put in a nice little key reversal. Excuse me, not key reversal. Inside bar. Can't call it a Remy, but inside bar there at 12.5. And that was right on the date that he said that he went and picked up some more. So I kind of like that trade. I did hear Peter say that he thought the gap was filled in, and I don't know. I mean, Peter, I love you dearly and fantastic presentation. I don't think this gap has been totally been filled in yet, but what the hell? We'll keep our fingers crossed, wishful thinking. Hopefully it is. But really good sort of initial signs that there is something maybe to work with there. I might actually even just go pick some of that out. It's kind of cool. The PSTH, I don't know. This is a tough one. I do potentially see that something went wrong here. And he said that no screen share. Am I screen sharing? I think I am. Resume presentation. You probably have to. You have to click on my funny button, or maybe I'll do. Maybe you can see it now. Hopefully you can see it. I'm a little concerned with that low, and as Peter said, that interesting how the news of the deal that he decided to go with that music company, it actually confirmed a fractal top and a gap lower violently here. I don't know. I'm on the fence about this one, but I gotta say I was really impressed. I like the look of this. And I don't mind actually, because this is a V top here, right? That's a new high. So at some point down the road, I do fully expect this area up here to be tested. So it's kind of cool. Of course, everybody do your own due diligence. Thank you so much, Peter. Of course, not financial advice. We're all just sharing. We're all trying to help each other. And if you do decide to take the trade, it's your trade. It's your responsibility. You know how the story goes. Certainly no guarantees from management. All right. I went on a little bit sort of ranty there earlier, but I think I gave you sort of an update of what I was seeing. There are some fun specialty situations. I don't know whether you were able to get in on that David's Tea, but gee whiz, what a nice little popper there, right? Also, too, I noticed a Broadway Financial. Why? I'm not quite sure. But Broadway Financial, I suppose I ought to go look into the news. He was popping up here. I actually made a new high here today. I'm humming and hawing about what I want to do with this guy. Foggy Boggies, probably this 261 explains why the market stopped there. Isn't that ridiculous when you see that? It's just like, oh, come on, that's nuts. So 255 was the high there. 256 was Foggy Boggy. The Foggy Boggy Elephant. Megan, did you ever read Saggy Baggy to your kids? Anyway, that used to be a really popular one in our house with Liam. The Saggy Baggy Elephant. Anyway, 38.2s, 261.8. So I've got an order up top here at the 50% level. I'm just going to be patient. Now, what the heck? That's a good looking chart. This thing might actually go quite a bit higher. If we go off of this sort of Foggy Boggy, gee whiz, look at the numbers it's painting up top. So I'm not really in a big hurry. I'll just, take the money as the market's handing it to us. And, that's the way I play the market, right? I tried to explain this actually last time somebody was that crypto bull cycle we had in 17-18. The way I like to play the market is I like to have an inventory of assets. And then as, of course, the public goes nuts, I just simply spoon feed from my inventory into the public marketplace. And then when assets get cheap, you want to go, of course, buy them back. So the feeling like what I try to do is I try to build my inventory on names that people don't really like, and then of course when things go nuts, start spoon feeding. These two big ones. Somebody mentioned Viacom the other day as well. These were the two stocks that hedge fund manager guy had to panic sell. I'm so close to pulling the trigger on that Viacom. I did pull the trigger on this guy probably a little bit early. Oh, way to go, Brian. But they're 2023 options, and I totally expect that gap up there to be filled in. So I'm very ready to pull the trigger on him. He's definitely an idea that I'm mulling over. Keep an eye on these two little ones. XTM. Been barking about this one recently. You announced the 21 to 23, so they're taking them up. This thing trades up through 25 and a half. Actually, 26. 26 is a high there. 25 and a half. You see 27. This son of a bitch is going all the way back up here. I'm telling you. Mark my words. May not be a straight line, but holy moly. I think I told you I bought a little bit of that M3. Maybe one of you came in and joined me. Looks like somebody cleaned out the 14 and a halves. That's funny. I like the look of that stock. I mean, look at this. This is ridiculous. Ay. I mean, look at that. And if anything, I don't know why TradingView is constantly changing this. Now it's like a big orange dot there. Love to see those orange dots. That's absolutely perfect. Oh my goodness. This would probably pay for. Oh, by the way, I probably should mention it here before we finish. Chatted with the boys. Boys don't really feel too comfortable with the Hawaiian experience being labeled TRI, and frankly speaking, I don't blame them. This is Brian. He's going off on his philanthropic tangent. Wants to change the world, all that kind of shit. So I actually did open up a private chat room on TRI for the crazy Hawaiian experience. Changed it. I initially started the name at TRI and chatting with the boys, and I have to respect them. They're kind of like, well, Brian, that's not exactly where we're going, and we are equal partners in this TRI. So maybe let's not do it as TRI, and that's perfectly fine by me. Like I said, Brian's a little bit of a weirdo here. So what I actually have done here is changed it to BHTR. What the fuck's that? Brian's Hawaiian Trading Retreat. That just for purposes of conversation. And, the documents, the prospectus and stuff that we've been handing around, I'll just go and make those notations. Perfectly fine by me. One good thing that I actually learned today, which I'm so pleased about because I was getting kind of down in the dumps about this, but the people that said that they thought they'd like to participate before, that's back on. We don't have to worry about size limit. And then also, too, actually, this works in our favor if we do the BHTR route, because now we can set it up as a not-for-profit. And, Brian, want to change the world, PMA, all that kind of stuff. Keep in mind, TRI is not a not-for-profit. Stuart and Julian are in this to make some bacon. And that's fine. I totally respect that. But I want to, the fact that I'm going to disconnect this from TRI and I'm going to create it as a not-for-profit, that gets me super, super excited. Then, the cool part about it is, from an investment perspective, we can justify returns as sort of like a note and all that kind of fun stuff. We don't have to worry about it being a security. So I was super excited. It's interesting how that project got some real direction today. And also, too, works perfectly well with Seb and his NFT. So we can do it through crypto and through the blockchain, and we can release capital at certain milestone dates. Oh my goodness, I'm over the top excited about the developments of what's happened there. So those people, I did create that room on the site. I will update you as it goes. And of course, anybody who is interested, now that we don't have to worry about sizes, the ladies group, they were contemplating putting just a small sort of group contribution together. You guys actually now can participate. So I'm super stoked. So lots of fun things there, and not for profit. Nobody's out to shill. Nobody's out to screw people over. You all know where I'm coming from karma wise. So super, super excited about all that. So keep sort of in tuned if you were interested in all that. If you watch the video later on, all that kind of stuff for developments, and I've added everybody to that room, and I'll keep you abreast of how all that is going. Individual stocks, tell you, man, if you play the market to make money from trading, you better fucking pay attention here. And you got to step up and you got to pull the trigger. You got to take the risk. Here's a fantastic one. This is Momo, one of Ray Z's ideas. I think the group generally liked it. I mean, this is everything that I teach in the school. And this is why I put together like the TRI SOF group is, I need more eyes to go and hunt these ideas. Look at this. This is textbook. This is everything that we do at TRI. I mean, it's just so bloody textbook. And look what's happening. I mean, this is what I would expect to happen. So, but you got to be on the ball. You got to be there. I mean, it's cool. Like names like Pauly loaded up all through here. I didn't want to get shaken out because I thought they were doing a lot of fuck yous. And now look at that chart. And, this is an interesting story because this is all about copper. And what is the professor of economics telling us right now? You tell me, is the professor of, I was worried a week or two ago. I was like, oh boy, that doesn't look very good. But actually, I'm getting pleased. You can see we're moving through the seasonal window. Here is July, when basically we should expect all the seasonal softness to play itself out. I don't know whether I would consider that like a buy level, but it's constructive. I mean, at the very least, now we can maybe think we're on the other side of trend line. So give us some sort of W to work with to start seeing, 3 or 4 or 5 higher lows or whatever. We might have to dip up further down into here. Totally fine. But was exceedingly pleased to see that stocks like Pauly, which, I always say that the stocks are the ultimate leading indicator. Stocks like Pauly here, I think, are trying to tell us that they actually want to head back up here. So if I go boobity boo, boobity shmoo. So still a little bit further to go in the short term. And then once that sort of event happens, then I would expect the pullback and cleanup, probably the next sort of wave lower. In that copper chart, just get us through that July period. But I do like what I'm seeing here. And that's like a good, copper and like stocks like Pauly, a lot of the silver stocks. Silver is really outperforming here right now. So where's our silver names? Of course, now they're not. But I want to buy these silver names. So if anything, I do want to see the market come down here a little bit. Both these are this is the same company. This EKK. I remember Kevin mentioned this a while ago. I mean, it was beautiful. I think there was a key reversal in here, but wow, what a great looking hot stock. Beautiful breakout right in here. Higher highs and higher lows. I mean, it just keeps marching higher. Silver stock. This Pan American Silver. I think I have sort of like bought setups, kind of potentially. Oh darn! I guess it was a different chart. Kind of potentially coming in here. I guess they haven't fired yet, but I guess you can kind of see the bull flag. You can sort of see the consolidation here. If this thing can get up through here, then hey, maybe we got that next leg coming in here. Wanted to buy some gold, but you down here off the double bottom, but you can see, wow, did it ever rally up? So actually, I wouldn't mind gold actually calming down here a bit to give me that entry. We should probably keep an eye. This is a good example of let's keep an eye on these commodity stories and see whether this commodity story is losing its edge. The commodity story of late has been sort of reflation, everybody, reflation, which ends up becoming inflation. Question is, was it sort of a short-term shock because of this COVID? Told you the anecdotes of Zach saying that he was at a builders meeting locally, and they were sort of telling him, the insiders are sort of telling him it was more short-term, because the mills were shut down and now the mills are back up and running. So don't expect the shortage to continue. Now, how ironic, wouldn't it be funny if we have another big COVID, another big shutdown, and of course all that crap goes back into shutdown. So this might be like ebb and flow, ebb and flow, ebb and flow. over the next like few years, we're going to be like, oh, straight up, oh, straight down, oh, straight up, oh, straight down. Get used to it, folks. That's what I think's coming. So, I think kind of validating that message from Zach. This is a forestry company. And you can see they're smiling at us. You know what we should be thinking if we do see these things start smiling. Interesting too. Smiles coming in where smiles usually come in on this thing as well. Coincidence? I don't know. So, do you come in on the sell side here? You kind of missed the boat. I mean, the irony of it all is that I could very easily see counter trend rallies right back up top here, just to fill in gaps. Right? I mean, kind of like that SPAC. Gaps usually like to be filled in. So I doubt it's going to be straight line, but at least respect the fact that the market is smiling at you. Maybe the runaway commodity price that you hear the public barking about, maybe that's not really the case. Just be aware of that. If that is the case and it gets more and more traction, then I could actually see these commodity stocks come right back down to their original bottoms, fill in these gaps. And actually, that's where I still have a leap bid working on this Agnico Eagle on the US stock going out to like next year. So we'll see if this thing dips down against these lows and I maybe get a cheap vote into the end of the year on sort of freaking out in the gold business. Not going to say that looks overtly bullish. That actually looks like a dangerous place to be thinking about buying. Interesting. Little international shipping companies sure look interesting here. This is the one that the insider came out and said that they bought a lot. I mean, if this thing took off from here, we would look back and go, this is so cliche. This is basically everything that we do and teach at TRI. So, I mean, you can see there's the big fat W. It's below 78.6. Anything else I want to talk to you guys about? Let's see. It's 20 after 10. What do you think? Do you guys feel kind of exhausted? You got like a big old fat rant at the beginning of this. You got a great quality presentation that I really shouldn't overshadow too much. And then a little bit of sort of banter from the Beamish at the end here. What do you think? You got some good value? Hey, Josh usually watches us on 2x speed. Are you up to real time yet, Joshua? He just turned up a couple minutes ago. So if he gives us the value. Oh, you know what I wanted to mention? Look at this. This is kind of cool. So Colleen, check this out. What do you think? Is that something you might that might be in your wheelhouse? Look at that. It's so pretty. Pretty, princess pretty. So this is a Friday afternoon. This is probably a really good example where you don't really need to chase. I mean, this thing is spitting out potential bullish key reversal signals here, right? Can you see that? So this is kind of cool because this is a really good working example. I think the level oneers right now, are you guys doing candlesticks? I don't know where they are. Or maybe they're still in eating their vegetables. But when you get to candlestick patterns, I mean, I love key reversals. And now Sjord's built into the engine a key reversal screener. So we can have like these ideas spat out. In fact, that's kind of interesting segue too. You thought I was done. This is so cool. I mean, I want to get 250 people subscribing to my key reversal signal. Remember, how do I say this? TRI is a for-profit organization. I want to get 250 people by the end of the year to subscribe to Brian's bullish key reversal signaling system. And you tell me. I find it fascinating. Look what just fired a bullish key reversal. Oh, that was fascinating. Is it worth paying maybe like $20 a month or something to have that bullish key reversal signal on the US dollar index? I'd say it's worth that subscription. But could I get 250 people to justify paying $20 a month just to get that? I think so. Well, that's one hell of a fucking signal, folks. And I tell you, like, I think I showed you earlier. Maybe I showed you, maybe I didn't. Like I said, I don't really want to overshadow the great presentation that we had there today. But bearish key reversals. I thought this was absolutely fascinating. Some pretty big, look at this, some pretty big companies are coming out with bearish key reversals. But one that jumped out at me recently, because keep in mind, I keep going on and on and on about the absolute joke of the Canadian real estate market. And I thought it was absolutely fascinating the other day. Look at this. We got some pretty big names here. But just actually, I guess it was about a week or two ago. Yeah, there it is there. Two of the biggest banks in Canada. In fact, these are basically owned by the same company, but National Bank of Canada and the Toronto Dominion Bank. That's some pretty ass fucking important, companies. Look at this Colgate-Palmolive. Is this worth $20 a month for a subscription? I think so. And, not only do so keep an eye on this. This is a fun one. This is like a warrant. If we ever get to the point where we're spitting out key reversals on warrants, oh my God, we are so fucking made in the shade. Right now, our universe is somewhat limited. But if I could sell 250 people on joining TRI to get that key reversal signal, you tell me. There is the trade. I'm in the trade. Hey, look, the trade's working. Fucking A. I actually stepped in here on this double top breakdown. And this is beautiful. This is totally David. Isn't this fucking awesome that this is like an atom, right? Everybody understands David's Adam and Eve's. And if you don't, you definitely want to take his course. But this is an atom, right? And this is the Eve. Right? So really cute. Now that is actually a confirmed bearish key reversal. The signal's actually firing here. It's a double top breakdown. It's an Adam and Eve. Again, how do I get 250 people to tell me that this is worth spending $20 a month on to subscribe? How do I do that? It'd be really interesting to see if Monday, Tuesday, this thing just fucking collapses, and somebody goes, "Well, that's how you get people to subscribe." So keep your eyes peeled, folks, and whatever it's worth, I did buy some out of the money put options, and if we do get that dump, which I think is coming here, this is a pretty damn good looking top signal. I wouldn't be surprised if those options go up quite a bit in price. So, fascinating, eh? Interesting too. Nice bullish. Actually, it's not quite a bullish engulfing. Anyway, so super cool. There's a bullish engulfing bar. So. Can you can you imagine how much I love you? You're the only one for me. Yeah. Could ever be. Yeah. My heart loves you, but my won't dry. Thank you. They're beautiful. Thank you very much. All right, everybody. Blah, 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 blah. Sure hope you got some great value. Thank you so much, Peter. What a great presentation. Talked a little Hawaii, talked a little bearish engulfing bar, bullish engulfing bars. Interesting how Canadian banks, bearish engulfing bars, US dollar index, bullish engulfing bars. That's actually exactly the scenario that I told you I thought was going to play out here following this 2020 Jupiter-Saturn cross. All right. Have yourselves a great day. PMA for the win. Again, thank you, Peter. Thank you, everybody, for participating. Kevin, if you could take us on out of here, I'd appreciate it. All the best, and bye for now.